Hey guys, you've joined us live at Moneycontrol. I'm Manisha Gupta, and the headlines clearly coming in from the crude oil prices, where we have seen prices decline 5% overnight. And with that, this is going to be a fourth straight week of decline, and we're trading at a 4-month lows when it comes to the crude oil prices. What is the sense that we can make of prices and fundamentals from here on? To get answers to those questions, we have with us Dharmesh Bhatia from NBD Emirates. Dharmesh, hi, thank you so much for joining us. And October was 10% of a decline. November is a single-digit decline, but we seem to be getting there right now. What's your sense, especially ahead of the November 26th OPEC meeting?
Yeah, hi Manisha. If you have noticed, the price has continuously in a downtrend. In fact, in last 2-3 months, I have continued saying that all the if you see all the months are in a backwardation zone. That means that market is anticipating a fall in the market. It was a temporary spike just because of the geopolitical tension, and that has been discounted. A $10 spike was being discounted in the month of November, and you can expect this decline to be continued. There is no winter demand as such in the market, and price is continuously getting hammered. With dollar index trading at the highest level, you can still the market is showing a bearishness. That is something which is not, commodity market should not react that way. But again, it's a fundamental news. OPEC is trying its level best to hold the price at a higher level. I stay in Dubai, and if you see the lifeblood of the market is oil, and if the oil starts falling, the economy will be in a flat zone. But currently, you can see the demand as such is not growing. China is not anticipating a big turnaround. The stimulus package is still showing not much anticipation in the price, including the base metal also. So you can see the price either it will be a flat or it will be pressurized more. 2024 is an election for US and India too, and definitely the Congress will not try to hold the price at a higher level for the inflation rate. So you can see the pressure will continue in coming months also. Anticipation price is around 67 to 68 by the month end, and if OPEC try to produce less and supply less, then you can see a sudden spike in the market, but that will be again a temporary spike. Around domestic market, you can see with rupee concern, the price will be maximum hovering around 6,000 to 6,500 is the range where market is trading, and any spike is a good level to accumulate short, even though the winter demand is not in the market. So you can see market will reach 6,000 in coming months.
All right. So you're saying the pressure might just about continue. We have seen record production in US. The inventories have been surging higher as well. And as you mentioned, the winter demand is yet to come in. Europe isn't in such a great state. The China refining numbers also seem to be going down. So that whole conversation about perhaps we could see a tightness in fourth quarter of this year, first quarter of the next year now seem to be easing off.
Definitely, if you see the forward month, especially 24 and December, it's trading at almost a 20% discount. That is again a big thing where market will not be able to hold the price. You can see the price will be hovering around $65, $67, which is a base price to hold. But that time OPEC will definitely come into picture because they don't like the price at such level. They want the price to be holding around $80, $85, where OPEC and non-OPEC both should be happy. But currently, with non-OPEC producing high, especially on the US side, and they want the price to be pressurized, you can see the domestic market. But it will be benefit for the India. The trade deficit will not be much in a pinch, and you can see rupee can appreciate because of the oil price falling down. So my anticipation is that domestic market will breach 6,000, and international you can see price breaching $70 WTI and heading towards $67 in coming weeks.
All right, so another $5 to $6 of a decline from here. But just looking at a broader sense, and a final question really, how would you look at the prices now for the rest of this quarter, and are you putting out any sense for the first quarter of next year as well? Because we were reading that ING report which says that there could be surplus in the first quarter of 2024.
I'm also with that news.
Okay.
I'm expecting that market has already been discounted. Almost $6-7 has been discounted in the price. The only concern will be the OPEC. The OPEC will come into picture definitely as soon as the price breached 70. You can see some news, sudden coming news that they have stopped producing or they have reduced the barrels of production in the supply market, and you can see the sudden spike in the price where market again can jump to $80. But that will be again a best level to accumulate short. And I would suggest go with a second month, third month contract whenever it's available in MCX, which will give a breather to you guys, and especially on the investor can hold a position for long term, maybe 60-70 days, and you can see a good return in the market. But immediate target will be $67 in coming weeks.
All right, so where we were talking about those $100 a barrel mark levels as well, and we've seen very sharp correction come in. Dharmesh, thank you as always for joining us with the crude sense there, with the expectation that we could be looking at lower prices from here and from these current levels as well, which are trading at a 4-month lows. Another $4, $5 or $6 of a downside is not